My name is Derrick Muturi. I'm the founder and CEO of Herdy. We are Nairobi's premier on-demand meat delivery service. So if you think about startup funding in Kenya, it's changed quite a bit over the last couple of years. 10 years ago, it was almost impossible hearing about someone raising, $1 million. Nowadays, it's no longer a big deal. My very first startup in 2012, it was an online educational platform called Herdy. I hope I carried it through because I think I'd be making bucks right now with the pandemic, but it died. And during that time in 2012, it was very hard to get any money. I tried to get a loan from a SACCO. I didn't have a job. I didn't have any sort of income. I couldn't get anything. Kenyan ecosystem was very, very young. There were I think only 2 accelerators at the time. I think there are close to 70 accelerators in Kenya right now. In Africa, over 10,000. 10 years ago, there were less than 65. If I just go through the stages of financing and startup investment in Kenya, to give you an overview, if you've never done this before, there are a couple of stages that you have to go through. So in the initial stage where you're thinking about your idea and you want to start something, you need a little bit of risky capital. Of course, you start with pre-seed funding. So basically, you look for financing from your family, your friends. People like to say fools, but I call them, fanatics, because those are the people who invest in your business in the early days. I raised money from my mom. We sold our only piece of land that we had, 800,000. She gave me 400,000 to go start my venture. Second, you can raise money through angel investors. I raised my second round of funding in my second business through the same way. So basically what I did is I did an investment memorandum, sent it to all my friends and family. I told everyone I'm looking for 1 million shillings, but you can invest up to 100,000 per person. So basically I was looking for 10 people to invest 1 million shillings, 100K each. So if you're looking for 100,000 from 10 people, that's a ticket size of 100,000. So basically, I didn't raise any money, unfortunately. No one trusted me. I was just from campus. So it was very, very challenging raising money that way. So in 2013, I finished campus, waited out a little bit, started my venture, which was rabbit farming at the time. Then I got the opportunity to join the NILAB in 2015. And NILAB being an incubator, basically they took me through training, business development, and they injected cash, which is seed finance, in my business. And seed financing in Kenya in 2015 was about between 1 million shillings and 2 million. That's the average that you get in many accelerators and incubators. In 2020, I think people start from 5 million. So these are good times for people looking to start business right now. So once you've really grown, you have traction, you can raise money from serious investors. You go to VC funds, which are venture capital funds. So you can think about SoftBank, for example. So SoftBank in Japan take money from everyone, Toyota, Mitsubishi, Samsung, from Jeff Bezos. They pull all these funds together and then they invest in a company like Uber, for example. The challenge with investing in VC funds is understanding what they want. So VC funds typically want returns of between 10x and 100x. So if they invest, say, 100 million cash shillings in your business, they want to be able to get the money at 1 billion in a specified time period. So if you can't guarantee returns of 10x or 100x, don't take money from VCs. There's something called the cycle of business. So seed stage, growth stage. So once you start plateauing and you want to now, exit your business, the typical way is to either sell your business to another business or to sell your business to the public. So think of Safaricom. So that's when you get to a point where you IPO. So typically IPO is for very mature businesses, but for startups, specifically in Kenya, there's a way you can IPO very early, even after 4 or 5 years. Once you can reach, 10 million shillings in sales a year over a period of 3-4 years, you can actually list a business on the NSE on a segment called GEMS. So that is growth and early stage medium enterprises segment on the NYC. So if you reach 10 million over 3-4 years, you can list a business, which is basically like a sandbox for preparing you for the big IPO where you can sell your shares to the public. So that's a way where you can get to IPO. Very few people do it here. And the challenge is, in our culture as Africans, we're just not used to buying stocks of companies. And that's why very few people IPO, and the majority of successful mature businesses in Kenya exit through acquisition or mergers. So basically, what we've covered here is when you're dating a business, you don't have something on the ground, you have no sales, you have no product, you're at pre-seed, you're looking for very early stage, expensive or even cheap capital where people will not sue you or kill you for not paying them. That is pre-seed. You're looking for typically in Kenya, 1 million to 10 million Kenya shillings. Seed stage, you have some traction, you've registered your business, you can raise money from more serious investors. You're looking at between 5 million Kenya shillings to 100 million Kenya shillings. You're at seed stage. Venture capital financing, there are various levels to venture capital. There's Series A, which typically in Kenya starts from about $1 million to all the way until Series Z. So you have Series A, Series B, Series C, which each of them is basically a higher series than the previous. The last one is IPO, where you're a mature business, you want to sell your business to the public and exit, so at least you can enjoy the fruits of your labor. You basically list your business and you exit over a period of time. One, they want you to have a registered company. Two, they also want to see that you have traction, that your business can transact, and it's a legal entity. Three, they want to see your management team. Basically, they want to have a director, one or two, basically three, even better. They want to see you have an executive board, which is basically governance. Do you have people who have checks and balances on your business? On the very early stages, it's very hard to have a board. And we think of only registered companies on the NSE that have boards, but it's very critical to have a board. When I had 2 employees, I had a board member. My board member was the financier of our business, which was Nilab, and one of my cousins. It's good to have a board than no board. They want to see that you have a plan. And they don't mean 100 pages business plan. They mean a structured execution strategy to which you're going to get to market, sell your product, market to consumers, who your target consumers are, what are your margins, where you're going to get financing after they've given you this round of funding. So basically a pipeline of investment. And they want to see how you think, basically. So you can do all of this in 1 page or in 10 pages. You don't need a 100-page document to prove your business plan. There's something called a business model canvas, which is basically 1 page, which has segments and sections where you can actually put your entire business strategy on 1 page. So I recommend you check out the business model canvas. You can download it online, just draft all your strategies on that 1 page. And for me, for the last 5 years, that has been my business plan. I've never done anything else rather than that, and it works. After you do all of that, investors want to see that you have projections. And projections, this is basically, you can do this in Excel. You put in, year 1, I'm going to have 1 million in sales. How are you going to have that? I'm going to have 18 customers who are going to pay me 10,000 each, and they're going to transact every 3 months. Why? Because they buy a product, they freeze it, and they only come every 90 days. Or I'm going to have 100 customers who buy from me every day. And my projections in year 1 is 2 million. Year 2, I'm going to grow by 8%. I'm going to get to 2.3 or something. Year 3, all of that like that. And basically, when you're doing projections, don't just put the good case where you're going to be successful. Use 3 cases. The base case, which is, I'm going to do this. I'm going to grow by 8% year on year. That's the base case. And then the optimistic case where you're going to grow by 18% to 20% depending on your business. And then you're going to have a pessimistic case where if things go really badly, I'm just going to plateau year 1, plateau year 2, and then I'm going to start growing by 3% year 2 or year 3. So basically have those 3 projections, and the investor, even though they're not right, they'll know that you know what you're doing. Raising money is hard, and this is the reality. I've done it, many people have done it, it's painful. It's gonna take you time. On average, due diligence for an investment at pre-seed, depending on who you're talking to, can be very fast. Seed capital, give it 8 months. VC investments, give it about 2 years to 3 years, just on due diligence before you have money in the bank. So when you're talking to investors, you have to have a pipeline, prepare it in advance, so you have at least 100 investors to be able to get at least 1 or 2 coming on board. So it takes time, it's painful. Raising money is very expensive. You're gonna hire lawyers to look at your documentation. You're gonna have a team review your documentation, and you're gonna sign a lot of things. So you have to understand what you're looking at. So look for someone you trust, and if you have a board, the better, because these are things that they look at. When you're raising money, you're gonna get rejected. My experience is, even just last year, having talked to about 65 investors or even more, I still even haven't closed the deal. So you can imagine. So you have to have a very thick skin. Remember that it's not personal. It's just business. If someone says no, they're not saying no to you, they're saying no to your idea or your business. So move on, look for someone who's like-minded, or iterate your business model. Just take the plunge, jump in. I've run 14 businesses, most have failed, but I'm still doing this. So all you can do, jump into the pool. If it fails the first time, try it the second time. If it fails next time, just keep doing it until you get it right. And while you're at it, enjoy it, and all the best.